All right, good morning, traders, and welcome to the opening bell. Today is Friday, July 24th, and I'm Michael Boutros, Senior Technical Strategist with FOREX.com. Pleasure to start the day with you guys today. Happy Friday to everyone in the room. We are heading into a market that's taking a bit of a breather from some of the beatdown that we've been getting. We did see oil come off about 3% earlier today after hitting that resistance level we talked about yesterday. The US dollar is a little bit uneasy. Pretty flat across the session. Dollar yen continues to rally. We got some comments again from the finance minister overnight. U.S. putting another round of tariffs. Lot to discuss. Any questions or trade setups, feel free to throw them on the message board. All right, great to see everyone in the room. Hey, Ashish, Chandra, we got Daniel, DeRay, James, Yana, Maury, Latanya. Happy Friday to you as well. Seth, Tom, great to see everyone this morning. Here's the DXY. So the breakout we talked about yesterday, it's pretty much steady as she goes across the US dollar majors, guys. Remember, the level of resistance talked about at the start of the week was the monthly open, the 618, the drop off, the yearly high. That buckled yesterday, spectacular fashion, tested it as support, and we're on our way. Now, the next major lateral level is just above the highs we just made, 101.59. Guys, that's not only the objective high day close for the year, it's also the objective June high. So you're talking about 101.59. That's the level we would need to beat. The major resistance zone on the weekly chart that we've been tracking is still 101.92 into 101.97. You're talking about the 2024 swing high, the May 2025 swing high, nice pivot in price. And that's sort of the next lateral level you need on a weekly chart to propagate the next rally towards 103. All things held constant. We're trading below resistance at the monthly highs. Need to pivot above 102 essentially to fuel the next major leg of the advance. There's nothing until like I said, 102.70s. You're heading towards 103, 2020 highs, 2016 high close. But right now, looks like a break of a near-term channel or a flag formation, whatever you want to call it. This slope, former slope support, we've been offering some resistance here, but the lateral levels are really the focus. So watch 101.69. If DXY is heading higher on this specific stretch, I want to see that monthly open hold. Okay. And a breach above 101.59 looks for that target towards 102. So euro also same exact scenario. The pivot zone we talked about yesterday at 1385, we did close below it. And an overnight trade, we couldn't even make a 4-hour close above. So all things held constant, this also remains well in the confines of the formation that we've been tracking. Key support, though, we've been talking about it since the start of the month. I can't really get excited about the next resumptive move lower in the euro, lest we close below 1355. Again, the monthly chart, I've been showing you guys this all week long because we're heading into the close of the month. Next week, 1355, uptrend support, major pivot for price. Momentum on the monthly chart, major pivot. Okay. So we're on the precipice. Here's euro on the weekly chart. This is the fifth consecutive week trying to test that level. A weekly close southbound of 1355 opens up the potential to drop towards 1228. That's just the 2023 high close. You can see that with the line chart. Pretty simple. So euro dollar approaching key support. Look for a reaction here. You need a 1355 close below. Remember, the low day close for the year is 1360. Just really nice levels. The monthly opening range low right there as well. That's the break you need to fuel the next major leg of the advance towards the decline towards 1275. So all things held constant here. Momentum is not in the current breakaway trade just yet. If we were to break below oversold today on the 4-hour chart like we did here with a confluent or an associated break below support as well, that might be the propagate that might be what you need to propagate the decline. But until we do, watch that 1355, 1360 level in euro dollar. Sterling dollar settling at support where we talked about yesterday. Nothing has changed here at all. We got the clip of 33. 33.02 was the May low. Okay. The 618 retracement of the rally off that low from June. Downtrend support. We've been talking about this since Wednesday. It's still holding that major support level. So again, nothing changes here. Initial resistance 33.26. If sterling is heading lower on this stretch, rallies would need to be limited to 33.98, basically 34. It's not just because of that 38.2, it's also the 200-day moving average would necessitate a re-break of that slope. That's our near-term bearish invalidation. Key support 33 into 33.02. A break below this, the monthly open comes in right here near 32.62. Okay. And then you're talking about that broader 32 level, which caused the rebound back in June. So levels are pretty clean. Euro right above support. Sterling right above support. DXY right below resistance. Aussie dollar looks like this. That pullback still continues to be the game plan. You know, it's been a very tight range, not really a strong rejection, but for the last 2 weeks, we've been talking about 70 into 70.22. That level still remains the key hurdle for the Aussie. So, you know, it's downtrend resistance. We butted up against former support. That failed. Yesterday was an outside day candle. It wasn't a reversal candle because the previous candle was also a down day, but it was an outside candle. I still will pay attention to those. We took out the previous day's highs and closed below the previous day's lows. Reinforces 1, 2, 3, 4, 5, 6, 7 days testing a major technical confluence. Whenever you're doing, just as a side note, guys, whenever, you know, we come in here every day, we highlight these major key technical levels. When you see markets and price respecting a level with this magnitude, those are the conviction trades that we want to be a little bit more attentive, okay, a little harder on. Because the levels are speaking louder than I ever could. So that's the key pivot. That still holds. Initial support at the objective weekly range low, 69.64. It's exactly where we bottomed overnight or yesterday. The low registered at 69.62. Okay. So the weekly range is still set. It's Friday. At the end of the day, like I said yesterday, if this slope breaks, you're looking for potential resumption. Monthly open support 69.18, 200-day moving average comes on that 1618 into 68.80, 68.90. It's getting a little bit higher now, 94. But you get the picture. Okay, you got a pretty simple upslope off the June low, a break below this week's opening range. A break below that slope would open up the potential for the resumption of the downtrend. And again, the levels are pretty clean. Anything northbound of 79.23 invalidates the broader decline off the April highs. That would open up a potential rally towards 70.82 and beyond. All right. One of the cleanest technical pivots so far this entire week. Just loving it. That's Aussie dollar. Okay. Dollar CAD. Put out a piece about this yesterday. We're still testing that resistance zone. It's trying to break that down slope. But we haven't done it yet. Okay, 40.96, 41.09 was the line in the sand. That's the November high day close. Okay, nice pivot in price, 38.2 off the high, downtrend resistance. Is this a breakout? If we close today northbound of 41.09, I would suppose it is. You're looking for 41.45, 42 is the high day close of the year. But all things held constant, dollar CAD is testing resistance right into the open of the session. So if you're holding long exposure, a good area to reassess any protective stops, bring him to break even or better, maybe even a good candidate for a trailing stop if it does breach. But you are testing pivotal resistance right here into the start of US trade. And we're looking for a reaction off 41.09, 40.96. Initial support doesn't change, just a slight adjustment to that 618 to the high we just registered. Puts support at 40.46. That converges on slope. And if we are heading higher in dollar CAD, that level would need to hold support near term with a breach above 41.09 today needed to fuel the next leg of the advance. Makes sense? Another really clean pivot, guys, just like Aussie dollar, right into the open of the session. We're at resistance as we speak. Aussie dollar at support. Okay, dollar yen. 40-year highs in dollar yen, 40-year low in the yen. And certainly we've been almost a perfect tag yesterday. I was laughing when I was looking at this. The high registered at 63.99. The 1618 is at 164 proper. So look, some interesting commentary from my colleague earlier today was very interesting on the dollar yen. if you look at dollar yen, guys, from a volatility standpoint, yes, it's been an extraordinary rally. Just off the May lows, we're up 6%. The volatility, meaning like the strength, the speed, the magnitude of the advance, as measured by a simple 20-day rate of change, you can see that it hasn't really surged that much. And it's been a steady ascent higher. Now, in overnight, you had finance ministry come out and say, we will take bold action with the preface, should the need arise. So does that mean that they're not seeing this rally right here as sort of the unprecedented surge in the dollar, weakness in the yen? Doesn't look like they're ready to act just yet. Guys, the BOJ interest rate decisions on tap next week. The markets are not anticipating any change. But at this point, it seems like the BOJ officials, Japanese officials in general, are starting to wake to the fact that, man, intervention has not been a fruitful endeavor. Here's the last time they intervened, right? And so, who was it? Rick Santelli was on CNBC earlier today, and I agree 100% with him. The biggest, the most effective way the BOJ or Japanese officials in general can impact this yen weakness is by raising interest rates. And again, they're not going to do that next week, but we'll see what the commentary is. It doesn't look like they're so quick to get on the trigger for intervention. Not only that, every time they do intervene and the market bucks that trend and breaks it, it's diminishing returns. And it's a waste of money. It is just, it's a futile effort. So it looks like the markets are still just continuing to maintain this upward trajectory. We're in a very clean uptrend. Nothing changes. Near-term resistance 164, but that's the next major hurdle. There's nothing above 164 until you're all sloped from there, and the next slope doesn't come in until about 165.50s. So it's significant at this level. Momentum is in overbought condition. So we don't want to try to fade this move by any means. Initial support 63.33. Bullish invalidation now gets raised to the opening range highs for the month. We said this yesterday. Maintains 62.84. Any pullback should be limited to 62.84 if we're heading higher on this stretch. Close above 164 needed to fuel the next move. You're all sloped from here. The next lateral move or lateral level isn't until the 1618 from the yearly low. That's up at 69. But that's the implications of this break. Median line resistance, lateral resistance. Look for inflection here on dollar yen. Constructive while above 62.84. Questions on dollar yen? Okay. Interestingly enough, guys, you're seeing this move again with related assets across the board continuing to move. Treasury yields have continued to move higher, and not just in the US, okay, across the board. The bund is at a 15-year high. The gilt is at an 18-year high, right? And so you're seeing as markets or as all of these economies, central banks are looking to curb inflation and potentially move higher on rates. The conflict in the Iran conflict just getting worse and worse. Markets are starting to shift that, right? And they're starting to take money off the table with regards to bonds, bonds or treasuries. Price lower, yields higher, right? So you're seeing that, which is typically a good mirror or a good correlate with what's happening in dollar yen. Continues to suggest we're still in that uptrend, but we are testing near-term resistance. Make sense? 1 month implied volatilities is under 6%, by the way, for dollar yen. That's the lowest in like 4.5 years, I think. So while there is a strong uptrend and there is a concern of intervention, the steady beat climb higher is still keeping volatility pretty tight here. All right, dollar Swiss. I'm putting together a piece on FOREX.com. Will be out later today. Here's what it's going to look like. You guys have all seen this chart before. I think, Chandra, you were asking about this yesterday. Good morning to you, sir. It's still steady as she goes, right? I was telling you yesterday my concerns, and those concerns are still there, but we're starting to make some progress. And the concern was, is this ongoing third reference point divergence going to finally break the camel's back and kind of turn this over? Hasn't seen yet. That momentum trigger looks like it wants to break today. And that keeps us on track for a tag of 82, 82.14, 100% extension from the advance off the yearly low, a basic 38.2 off last year's high. Uptrend resistance is just above that zone. And that's the next major key hurdle on this dollar Swiss rally. Now, this is the 5th consecutive day up. Not really something too outside of the norm. Here's your last consecutive count indicator. So we've had a couple of days. This was a 6-day rally back last month, saw a 1-day interruption. We had another 5-day rally here in May, which continued before a little bit of a pullback. Point being, you're starting to get a little bit towards the upper bounds of what the near-term rallies have yielded. But that key resistance is just a bit higher. Here's what it looks like on the 4-hour chart. Okay. Nothing changes. Initial support back at the monthly range high. That's 81.51. We tested that in overnight trade. Next resistance target 82 into 82.14. Bullish invalidation. Yesterday, I told you guys to lift it to the monthly open. I'm still inclined to leave that there. I would tell you that if we break below 81, probably if I was holding, I'm not, just as a disclaimer, but if I was holding a long position, I probably want to bail in that situation. But from a technical standpoint, taking slope into account, the monthly open is kind of like the line in the sand. Anything below that, you're threatening a more significant highs in place. So I like the levels. Anything above 82.14, you're talking about potential breakout of uptrend resistance. Next level up comes in at 83.32. That's a 2023 high. So all things held constant, looking for a reaction towards 82, constructive while above 81 is dollar Swiss into the close of the week. Watch that momentum profile. I was showing this yesterday. Hasn't broken to overbought yet. It would have been an encouraging development, but we're still right there. So just watch your eye on that daily momentum. It's still a little bit skittish that we're getting that divergence, but all things held constant, levels are good. Chandra says, thank you, Mike. I'm honored you remembered my request. Hey, cheers, mate. Of course. All right. So that's all the FX crosses. Do let me know if there's anything specific you guys want to look at. Quick note on gold. Nothing to say. Okay. Right in the same range. The monthly opening range is preserved into the final week of the month. I'm not doing anything on this trade until we clear this godforsaken range. Remember, the entire monthly range is defined by the 3-day rally we made right into the open of the month. We need to see a breakout. Losses below 839.51, detrimental, major downside potential if that were to break. A breach of the monthly opening range high would open up the potential for a test of the yearly open, and that's 43.19. Till we do, keep it light here on gold. Okay. Chandra says, just a suggested a request. Is it possible for you to change the color of the downtick candles to red on your chart to reflect the general public are using readings on the chart? I acknowledge your request, Chandra, but no chance that I'll change it. I have that done for a reason, brother. Very early in my career, actually, people are always haven't been asked that question in a couple of years. Why don't you use red and green candles? And the reasoning might sound silly, but I don't like associating red and green with up and down candles. I want to be as neutral as I can. And believe it or not, I've just seen retail over 20 years. I try to keep the charts as benign as possible. I'm looking at it. I just want to recognize whether it's an up and down candle, red losses, green gain. I don't want any of that. I want to stay as sort of neutral mindset as possible. I know it's an odd explanation, but that's that's where I'm at on that, Chandra. So appreciate the input, though. I see where you're coming from on that. All right, oil. Here's oil. 90.79, 91.78. We did close above it, but not by much. Okay, the close high was 92.35. We were looking at 91.78. You can see the pullback here. Former slope support turned resistance. That lateral level, which is defined by the 2023 high day close, the 2023 high week close, and we just snuck above overbought and pulling back. So there is the potential for some kickback, no doubt about it. But it's still an uptrend. Okay. The real near-term upslope gives you the high day close is still at 85 below that slope. That's still support for me. This is obviously a very strong, event headline driven trade. So I'm not going to stick and be too stringent with the slope. The lateral levels are what's going to matter here. So 85, the high day close, that's now the near-term support level that would need to hold for the oil trade to remain constructive. We need a more solidified close northbound of this zone to mark resumption. This is only a 2-point slope. Remember, any 2 points can make a trend line. It's the third that confirms, so I don't want to stress that slope. But if we do break from here, the next upside shot is 102, 101, 100 spot 97 to 101.50. That's the June 2022 low and a 618 of the decline. This is all the way back from the 2022 highs. So it's been a decent pivot in price all throughout this year. That's your next level up if this were to break. Obviously, we didn't get any new attacks in overnight trade. The word on the street from recent reports is that there is starting to become a more profound shuffle in the posture of the military with regards to bringing up medics. It's sad to say, but to the front lines and kind of prepping for a possible larger scale attack. Now, keep all of your risk well defined into the weekend. There's a likelihood, this is just my pure speculation, that we could see sort of a big leap forward in the military conflict over the weekend. So make sure that all of your risk is well defined before you head into the close of the trade today. And for oil, things are obviously on shaky ground. So still in an uptrend, still constructive above 85, topside breach above 92 on a closed basis gets you the resumptive move for the next major rally. As far as Bitcoin is concerned, getting a little bit quiet here, but we're just fizzling out near uptrend resistance. May see a little bit more downside. I published a report on this yesterday, we're constructive of a 61,244. That's the 618 of the rally off the low, converges on uptrend support and the swing lows we made earlier in the month. So if this is a larger low, a more significant low, remember 57,885 was our yearly target. The trade of the year published in January, that was the level we said, hey, look for a much larger reaction if Bitcoin were to get all the way down there. And we did. Okay. We're about to snap a 3-week rally, potential for some kickback. Momentum did get to the highest levels on the daily charts that we've seen since May. So if a more significant low is in place, losses should be limited to 61,244. For the bulls to reassert a conviction bull bias, we would need to clear 67,322 on the upside on a closed basis to validate the next leg of the rally. But all things held constant, we just came off uptrend resistance. Here's initial uptrend support. In fact, the 38.2 looks like it's right within range at 63,412, but that's your bullish inbound. Okay, so anyone in the crypto market, those are the kind of levels I'm focused on right now on the near-term charts. Really critical time period. Critical time period for the Bitcoin trade. Okay, that's everything on my front. Chandra says that's fair enough. Thank you. More than welcome, sir. Do let me know if you have any other questions or trade setups you want to review. Again, next week, the economic calendar comes back into play. Not only do we get the release of the Fed rate decision on Wednesday, no changes expected. We've been getting limited commentary, obviously, from Warsh with the new approach on Fed communication. So we always look for that commentary in the presser. Even more so, we might get less, but even his lack of commentary, the markets are taking as a tell. So that hits tomorrow, next week on Wednesday. Thursday, we get the updated assessment on inflation with the core personal consumption expenditure, the Fed's preferred inflationary gauge, right after the FOMC. So we get a double whammy, event risk next week, and an update on the GDP that we got for Q2. So all of that's on tap next week amid the potential for some serious escalation and headlines coming out of the Middle East. Stay nimble. Make sure your risk is well defined. Remember, Monday morning, we kick things off at 8:30 Eastern for a full hour with the weekly technical outlook, and then right back here at 9:30 with the opening bell. Best of luck trading, guys, and have an awesome weekend. I'll see you on Monday morning. God bless.